a concept doesn't have to be complicated to be useful. Don't you think so? That's why today with this video I want to show you easily how you can do position sizing in Forex. And in principle, this is much more complicated than the position sizing in stocks. You may be familiar with that. When you know your entry point and your stop loss, and you know your risk per trade and your capital, then you can, with the position sizing formula that I explained in a previous video, quantify how many shares you need to buy or sell to get that risk. But in Forex, we don't have the number of shares. Everything you trade may have different rules. For example, when you trade futures, you can have your contracts instead of number of shares. Option is different. And for Forex, we have lots. Okay? But just for now, since I don't really want to give you all these details that you can find online, but only what is really useful for you to place trades, let's just write this down. So in the stock market, we have the concept of shares. Okay. In Forex, we have lots. And this means that when we are buying something in Forex, and I show you here an example with this platform, if we want to buy euro US dollar, so remember in Forex you are trading pairs, they ask you the volume, and this quantity that can be fraction also is the lot. So if I write 1, it means I'm buying 1 lot. If I write 1.2, I can buy 1.2 lot. And this is a big difference because with compared to the stock market, because we can have fractions here. We can have 1 point something. Now you may be wondering, what is a lot? If you really want to understand, there are resources online that you can consult, but what I want to show you here is just the main concept that you need to be familiar with when you want to place a trade. So we don't really need to understand the logic behind the computation, what is a lot and all this. We just need to understand how it works. So before doing that, there is another concept that you need to understand, is the concept of pip. So what is a pip? You see here, for example, we are doing, we are showing the euro US dollar, and then you have these numbers, okay? Now this last number before the small one here, so now this 0 and this 0 here, this is 1 pip. Okay, so this position is the 1 pip. What do I mean? Now I have 1.1230. If I want to add 1 pip, will be 1.1231. Okay, so the 4th decimal is called pip. And you can think at pip as the unit for Forex, similarly to the dollar in the US market. Okay, so what we can say is that in the stock market we have the dollar, here we have the pip. So with this we start to understand the parallel between these two. Now when we want to place a trade, what happens? Again, we have entry point and stop loss, and then we need to understand, given our risk and capital, how many lots to buy. Okay, so let's take as example the euro US dollar, and say we want to enter at 1.1232. Okay, and let's say that the stop loss is 1.12 I don't know, 10. It's just an example, okay? And this means that the difference between entry and stop loss is 22 pips, right? is similar to the distance between entry and stop loss in the US market, for example, but instead of having US dollar, as I say, now we have pips. Now in this situation, suppose you have an account of 10k US dollar and you want to risk 1% for trade. The question is, how many lots do I have to buy to have this risk? Okay? And the easiest way to do that is to use a free tool online that I want to share with you now. This tool is this. I will give you the link in the description, but basically what we do is very easy. So let's cancel this. We can write here the account size 10,000 US dollar and the risk we say 1. Okay, and how many pips our stop loss? We said it was 22, right? The difference between entry and stop loss is 22 pips. Our account is in US dollar and we are trading euro US dollar here, right? And then we calculate and then we will find out that we need to buy 0.455 lots. So if we want to execute the order that we just mentioned, right here we have to put 0.455. Okay, and here we can put, let's say, is a buy stop order 32, and sorry, this is the stop loss. Then something like that. Okay, so we can buy at 1.1232, for example, and then the stop loss is at 1.1210. So we have 22 pips of difference. And how many lots do we buy to risk 1% of our capital? 0.455. Now, this can be different for different pairs. For example, if we go to, I don't know, US dollar, Canadian dollar, so everything is the same capital, same risk, same stop loss. But look what happened when we go here, USD, Canadian. Now you see the number of lots is different. Okay, because this is also computed taking into account the USD Canadian price. So that's why I'm saying that this formula is more complicated than the position sizing in stock, but we are lucky because this website is free and it can easily tell you how many lots to buy. So you see, you don't really need to understand the logic behind the computation. This is done for you. The only thing I want to mention here is that the concept of PEEP, and if you want to find more information, I suggest you this website, babypeeps.com. is very, very good and useful for Forex. They will tell you that a PEEP is basically the last decimal point, okay, the last decimal place of the price quote, and as I said, you can take this number before this small number. The small number is called pipette, you can ignore, is basically 1 pip is that. The small, like the 3 in this case. The only difference is the Japanese yen. Remember that, because if you look at this one, you see is the 4 decimal point. You take a pound US dollar, again is the 1 pip is the 4 decimal point. Aussie dollar, US dollar, 4 decimal point, but the Japanese is different. So if I want to trade Japan, for example, instead of 4 decimal point, I have 2 decimal point. Is again the small number, the number before the small number. So 1 pip here is not the 4 decimal point, but is the second one. So what do I mean by that? Suppose I want to place a trade for US dollar, Japanese yen, okay? Where is it? this one. And again, my stop loss is 22 pips. So first I have to buy 0.491. Okay, so here I have to put 0.491. And suppose I want to buy at 107.93. If my stop loss is 22 pips below, then is 107.71. So you see now 22 pips are basically 0.22. In the other pairs, 22 pips will be 0.0022. Okay, so this is the only difference that you have to remember when you're trading Japanese yen, but all the rest is the same. So again, when you trade Forex, what is the main concept? Instead of shares, as in the market, the stock market, we have lots. And instead of dollars, we have pips. And pips can be different from the, depending on the pair that you are trading. So remember that for the Japanese yen is 0.01. Okay, this is 1 pip. For the others is 0.0001. And if we want to compute the position sizing, we can just go to the website here and we put all the information, and then we will know how many lots to buy without worrying about how this is computed. So I hope this video was useful. If you have any question, you can leave me a comment, and as usual, see you next time.